Since our last silver article, the price of silver has dropped. With due respect to Frederick Bastiat, the price is the seen. The basis mostly goes unseen. We will take a look at the market data revised for a few more days of trading. But first, let's look at a chart we've discussed a few times over the years. It shows two ratios, gold basis to silver basis and gold co-basis to silver co-basis. It shows a measure of gold's abundance to silver's abundance and gold scarcity to silver scarcity. When the blue line is above 1, it means the gold basis is higher, which means gold is more abundant. When the red line is below, it means gold is less scarce. The blue line is not merely above 1. It is now above the spike in October 2008. To find a level this high, we have to look as far back as 2006. In other words, 16 years. Before that, 2001. And before that, 1998, when Warren Buffett's Berkshire Hathaway was buying mass quantities of silver, after he drove the price up 73% from about $4.25. Now, here's our old standby, the silver basis overlaid with a dollar price measured in silver. The co-basis, our measure of scarcity, has been almost a straight line up from August 8th. So has the dollar, which rose from 1.49 grams of silver on August 10th to 1.75 grams. That silver dropping from $20.80 to $17.76, just about $3 in dollar speak. Normally, the basis should be around the cost of storage plus the cost of interest plus marginal profit margin. The higher the interest rate, the higher the basis should be. Times have not been normal since 2008, and doubly not normal since the COVID lockdown. Anyways, the relevant interest rate to the basis, i.e. the short-term rate, has been on a tear since Q4 last year and accelerating since the end of January. At the beginning of August, 6-month LIBOR was 3.3%. Now it is 3.7%. That's a gain of 0.4%, which may not sound like a lot until you look at the co-basis, which is under 0.5%. The interest rate moved as much in a month as the total magnitude of the co-basis. Normally, but remember we're not in a normal world, the silver basis should go up by this 0.4%. It would be remarkable for going down at all, much less with the interest rate rising this much. Finally, let's take a look at the silver lease rate, which is LIBOR, silver forward rate, closely related to the silver basis. It's up to 4.8%. This is the neutral point for a bank. They borrow at LIBOR, buy silver metal, and simultaneously sell it forward, 6 months in this case. They would have to charge 4.8% just to break even. This does not count their own internal treasury costs. The bank as an institution may be borrowing at 3.7%, but it marks up this cost to each group within the bank. Then the bullion group has its own internal costs. Then it adds a credit spread based on each particular lessee's risk profile. And finally, it adds a profit margin. Intuitively, it makes sense that as something becomes scarcer, the cost to rent it goes up. Suppose you live in a city that has long stopped developers from building new apartment buildings. Then, a large number of people move in, perhaps from California. Apartments become scarcer and rent goes up. This is what backwardation is telling us. Silver has become more scarce. Our first point is that this is likely to be resolved by a price move to the upside. And secondly, that the cost of renting silver through this channel has now become prohibitive. By the way, for those who wonder why there's not increased production of silver coin blanks, hence eagles and other coins with high premiums, the skyrocketing lease rate plays a factor. This is a cost borne by any mint that relies on this channel to lease its metal. Monetary metals is a better channel. We don't depend on the unstable dollar interest rate. We don't buy silver and sell it forward, so we don't rely on the unstable basis. We just lease metal from people who own it. Our process has fewer moving parts, and that's a good thing, as 2 of the moving parts in the conventional channel are subject to wild gyrations. If you need leased silver, perhaps to expand your coin blank manufacturing, and if you're frustrated with the skyrocketing rate you're being quoted, please complete the inquiry form on our website at monetary-metals.com or give us a call at 646-653-9729. Make sure to subscribe to our channel to get all our supply and demand reports, blogs and research, gold exchange podcast episodes, and more. We'll see you next time.